Proper financial management stabilizes your business and reduces the likelihood of failure. Managing funds may be difficult when establishing a new business. Often, the skills you bring to manufacturing your product or performing your service are the reason your business is successful. But if you do not manage your funds properly, you may get into negative financial habits that will eventually destroy your business. In this video, we are going to discuss some financial tips for new businesses. So, let's get started. Number 1. Cash flow management is key. You must understand where every dollar comes from and where it is going. You are putting your business at risk if you do not manage your cash flow properly. When you run out of money, no matter how amazing your concept is, you hit a brick wall. Make a budget and stick to it. Number 2. Track and monitor all spending. With a new startup, there are going to be expenses coming at you from every direction. To stay organized, utilize accounting software. Not only will this assist with cash flow management, but it will also make tax time much easier every year. As your company grows and your accounting gets more sophisticated, you might consider hiring a professional. Number 3. Limit your fixed expenses in the beginning. Keeping your expenditures minimal in the early phases of a business is critical to its success. You do not require a large, sophisticated office in the middle of your city, nor do you require fully supplied meals 3 times a day. Operate thinly so that you may devote the majority of your cash to grow, allowing you to adopt whatever perk you want one day. Too many entrepreneurs focus on the wrong things, such as flashy offices and lavish facilities, and forget that generating revenue should be their first concern. Number 4. Don't be afraid of loans. Loans may be frightening. They can cause anxiety about the financial consequences of failing. However, without the infusion of funds provided by loans, you may encounter significant obstacles when attempting to acquire equipment or expand your workforce. You can also use loan proceeds to increase your cash flow, making it easier to pay staff and suppliers on time. Number 5. Focus on customer acquisition. You have no business if you don't have customers. The sooner you find out how to gain clients and grow, the better your prospects of success. Once you've identified several acquisition channels, focus on cost reduction. Because it is difficult to examine every prospective acquisition channel at first, both in terms of time and expense, concentrate on the most profitable prospects. Once you've effectively scaled those, you'll have the financial capability to explore other channels. That's all for today. Which one of these tips do you like the most? Let us know in the comments below, and don't forget to subscribe to this channel for more amazing videos.